Winter doesn't seem to be done with us yet, but temperatures will soon pick up. And what about Calgary's real estate? Will it follow suit? Hey, welcome to another video. My friends call me Mike Abou. If this is your first time here and you want to stay up to date on the Calgary and area real estate market, or if you're looking for ways to simplify the buying as well as the selling process by using specific marketing strategies and negotiating techniques, make sure to follow and subscribe. Winter isn't done with us yet, but temperatures will soon pick up and Calgary's housing market is going to follow suit. In this month's market update, I'll take a close look at what that means for you. We'll also go through, the usual market analysis to give you a clear idea of where Calgary's real estate sector is and where it's headed. And we'll also wrap things up with a look at what it will all means to you and to your finances. Rather than focusing on sales, we'll start off by looking at the single most important factor that is underlying home sales in Calgary, and that is inventory. Now, as I put this video together for you, there are 2,750 homes for sale in Calgary. Now, that might be 2,749 more than you actually need, but have a look at where local home inventory stands relative to the past, 15 years. The inventory shortage in Calgary is nearly unprecedented. You'd have to go all the way back to 2006 to find fewer houses on the market. And looking at it from a different angle, we listed 2,389 new homes in February, and that's 60% fewer than in February of last year. Last February was pretty generous. We saw a net increase of roughly around 1,000 new homes on the market from the month before. This year, that number shrunk to about 400 homes. That's an historically low figure too. There's no single segment of the market that is responsible for the shortage. If we look at the different segments of the market, the detached market, Calgary's biggest, saw a 60% drop in new properties to market, putting it about 24% behind last year's pace. And new listings for semi-detached homes and duplexes fell by 50%. Row homes also joined in the fun with a 48% slide in new listings and 39% fewer actively listed homes than a year ago. Apartments to the rescue, right? Maybe, but not quite exactly. New apartment listings have held steady, which is good news for most Calgarians, but without an increase in listings, apartments have done nothing to offset the shortage of other types of homes. Add it all up, and new listings and those that have been active for a while, and there are 19% fewer homes available for purchase in Calgary than there were a year ago. And let's take it a bit further and look at the suburbs as well. If Calgary's new property listings aren't enough to fix our inventory shortage, what about surrounding communities? Last year, sales demand in Calgary's satellite regions was even higher than what we saw in Calgary proper. Total active inventory fell through the floor and only picked up when we got well into spring. Things are looking a bit different in 2023. Inventory is up against last year's totals, but not nearly enough to make Greater Calgary a buyer's market, which begs the question, does the entire Calgary region have an inventory problem? Well, the answer really depends on whether you're buying or you're selling. If you're a buyer, then yes, you're up against a shortage in inventory. You'll need to be ready, whenever a new home hit the market, and you'll need to be prepared to meet the asking price or above. The good news is that we're not on the crest of a wave. You'll be buying into a resilient market with significant future upside. If you're a seller, on the other hand, you're in a driver's seat. Not that you can name, your price without doing a bit of homework and a bit of research. Higher interest rates have put a cap on what buyers are willing and are able to pay, and you won't see the sorts of bidding wars that we saw last year, but you'll still be dealing with buyers who are prepared and who are ready to meet your asking price and to meet them quickly as well. That's where all that research comes in. With interest rates weighing so heavily on buyers' decision making, you could price yourself out of the market even by setting your asking price 5% too high. Other sellers are doing their homework too, so you need to stay reasonable. Don't get greedy, and I promise you this market will reward you. Finally, let's have a look at sales. We typically use year-over-year statistics to take stock of where the market stands. In normal market conditions, that's a good way to identify trends, but our market wasn't normal in 22. We'll need to step back and consider a historic context to draw any meaningful conclusions. If you just looked at last year's figures, you'd think that home sales in Calgary have cratered in February. Here's what the 10-year chart shows. This is a broad overview, not a complete picture of the housing market, but it does show that demand remains strong throughout the Calgary region. things become even more clear when we look at the types of homes that we have sold year over year. For example, in February 2022, apartments and row homes accounted for 33% of all sales. A year later, that figure was up to 46%, with nearly all of the difference accounted for by a drop in detached home sales. Now, that's a massive shift in the lowest priced properties on Calgary's market. And since most of the region's apartments and many of its row houses are located in Calgary proper, we've also seen a shift in sales away from surrounding communities. Calgary is accounting for 80% share of the regional market, and it's as high as I've ever seen it. Now, is this anything to be worried about? Not if you consider the bigger picture. The single-family market remains tight, supporting high valuations across the Calgary region. That trend should continue as more apartments and row houses hit the Calgary market to address continued demand for those types of housing. It's still early, but the benchmark sale price in Calgary has increased by about $12,000 across all housing types. That's a 2.5% year-to-date increase in housing valuation in a market that really some people thought might crash. We're still far from the $546,000 we saw in May 2022, but the market appears to be building significant momentum. I haven't been worried about the market crashing in 2023, but I'm not predicting a sprint back to last year's high either. I'm saying that the Calgary's market appears to be fundamentally strong, and a closer look at housing prices supports an optimistic view. As we saw earlier, the apartment and row house segments are driving the Calgary market these days, and that extends to their price growth. While the market as a whole is still looking for ways to meet last year's highs, apartments and row houses have already done it, and nothing appears to stand in the way of their growth. So apartments values are up 11% year over year throughout Calgary, and in some areas they've actually grown by 19%. Even when you look at the slowest growing communities, they have seen apartment values rise by 9%. Price growth in Calgary apartments have risen an average of 3% a month. And if we're to look at row home valuations, they are also rising nearly as rapidly, 9% year over year at an average of 2.3% per month. Prices for detached and semi-detached houses have increased much more modestly. Both with around 2.5% year over year gains. And this extends across Calgary's neighboring communities. Airdrie is flat, year over year. Cochrane is up 2.5%, and if we look at Okotoks, it's up about 3.2%. And these were actually last year's price growth champions, but it's a new game in 2023. Now, as we look ahead, it's really time to address the question that I led off with. Will Calgary's real estate prices take a leap forward this spring? The first two charts we looked at this month have some clues toward an answer. If we look at valuation, it is built on a foundation of supply and demand. That's good news for the Calgary market. We know that an almost historically low number of houses are available for sale, and we know that sales have remained strong, even though they're down from last year's unicorn levels. Those two numbers alone are enough to tell us that Calgary's real estate market is strong and built to stay that way for the long haul. With apartments and row houses continuing to post huge valuation growth, I can easily see our benchmark average sale price rising 10% or so this year, similar to what we saw in 2013 and 2014. And here's the best part. Calgary continues to reward sellers while staying fair to buyers. Despite all this growth, Calgary's housing affordability index is the best in Canada, and we'd need to see years and years of enormous price increases to knock us from the top spot. I'm excited for Calgary's long-term future, and I think you should be too. Now, this is just an overview of what's happening this month in the Calgary real estate market. Your own situation is unique, and if you'd like to learn how Calgary's market can really help you meet your specific goals, give me a call or send me an email, and I'd be happy to help. Until next month, take care.